Hey everybody, hey, welcome to YouTube Live today. I'm Dave with the Apiary Fund, and we got some really exciting things that we want to talk to you guys about today. So for everybody that's on, I'm
unveil all the secrets there is to know about trading today. So stay tuned, and I hope that that you guys will get a lot out of this today. Before we go any further, just want to check audio. Make sure that you guys are hearing me okay and also seeing me okay. If you can just put Y in that little chat, if you can hear me okay, audio levels, all that kind of stuff. Because like I said, we have some really exciting things that are on tap for today. And I want to make sure that you can hear me when we're going to go over them. So I got my little chat thing. I'm just going to make sure that you guys can see that. Hey, Brent. Hey, Larry. Mohammed, John, glad to have you guys. Anthony, hey guys, glad to have you guys on board. If you guys don't already know, the FOMC minutes are just came out, and so we should see a lot of volatility in the market right this second. Maybe it just dropped. The euro or the dollar just got stronger all of a sudden. So that's activity happening right now. So if you are trading, just want to make sure you're cognizant of that. And that's happening currently as we speak. Let's see. Anybody out there? I just want to make sure that my audio and video seems fine. Thank you. Merrick, thank you. Dan, I appreciate it. Perfect. Hey, guys. Thank you, guys. All right. I'm excited. So let's dive right into it. One of the things that I want to talk about today is kind of a little bit about how I look at the markets, how I analyze when I open up my charts for the very first time, what I look at, where I started, and what are some of the tools that have helped me. Then I'm going to transition what we talked about over and look at actually some of Sean's trading sessions that he's done, and we're going to talk about why he's doing what he's doing while we're watching it happen together. So feel free to post your guys' questions. I'll get to as many as I can, as often as I can. There's a little bit of a lag here, but I want to make sure that you guys have an opportunity to ask questions. We have some good interaction here today. But first of all, let's start with opening up Alveo. So let's go over and let's go to my screen, Alveo here real fast. And as you can see on I have the 1 minute chart that's open with the euro US dollar, and then I have the 5 minute chart that's open on the right. Those of you guys who have watched Sean trade, our head trader here at the Apiary Fund, has seen a chart that's similar to this. The biggest reason why I love having the chart, and I look over about 1,500 candles or bars, so that gives me a good historical range that I kind of widen out, and I look and I see, okay, what's the 1 minute chart been doing for the past 1,500 bars? What's the 5 minute chart been doing? So I look at the 5 minute chart that tells me roughly trend analysis, and then I look at the 1 minute chart for my entries and my setups. All right, so we're gonna just kind of look at this chart, this live chart. So the first thing that I'll do is I'll look and I'll say, okay, you know what? The 1 minute chart for a good period of time, probably right in here, has just been kind of going sideways a little bit, right? Up, down, a little bit of a downtrend, but basically inside this box is our sideways box. So the first thing that I do is I'll come over here. And I'll draw my trend line. So that's what I want everybody. If everybody wants to follow along, or maybe trade, if they want to learn the way that I trade or the way that Sean trades, because I subscribe to his methodology and trading the way he's traded, here's some of the simple basic setups that we do every time. Now, Sean doesn't draw on his charts because he's done it so much and he can see. And so the best analogy that I've used and I love using in the past is kind of like learning a new language. When you start to look at charts, when you start to read price, when you start to understand what your candles are doing, it's kind of like learning a new language. And so I'm just going to teach you the basics of what to do on every single time you open up a chart. I've helped a lot of traders through the years, and I see some of the most common mistakes that traders are making is they don't think about
direction, or they don't do some pre-trade setups.
So let's talk a little bit about those pre-trade setups. For one, the most, or the thing that you can do the most, I think, is know where your trends are. So we'll just draw a quick trend line. Now again, I want to make sure that you guys know that when you do draw a trend line, that it's more or less you're drawing it with a marker and not a fine line, right? This is the areas, this is the region of a trend line. Okay, and so as you see on the 5-minute chart, we can kind of see we have that little kind of a little bit of an uptrend happening, but you also have a downtrend as well on this top part that's coming, that that could be coming into a triangle here. So when you look at that, you kind of say, okay, there's a decision point, right? If we hold true on this downtrend, well, the decision point for the market is right here, where you can see as soon as the minutes came out, it kind of went down into that trend line area and said, am I going to test the trend? Is the market going to test this trend? Is it going to break the trend? Now, normally news events are something that can break trends. And so when you know that there's news events happening, like right now, the minutes, there could be some potential volatility, and so you want to make sure that you're cognizant or aware of the news events that are inside your trading session. So I guess let me back up. The first thing that I do is I check the news to make sure that during my trading session that I'm going to have, what kind of news events or what could possibly be impacting the market while I'm trading. And understanding that is your first key to navigating it, right? If it's a major news announcement, maybe you shouldn't be trading in the beginning stages of your trading journey. Maybe you shouldn't be trading that period of time if it's a major news announcement, excuse me. So be cognizant or be aware of what's happening during your trading session. And so what we're going to talk a little bit about is how to get in and out of trades quickly, because that's the way that Sean trades. It's the way that I love trading. If you're a position trader or a day trader, maybe this, a lot of this stuff that we're talking about, you can translate into looking to win your trade setups, looking to when to get in, looking to when to get out. And you just put it on a larger time frame. So right now, for the sake of what we're going to show you and the way I trade, we're just going to talk about that. The 1 minute, the 5-minute time frames. We're not going to really look beyond that, because if I'm only going to be trading for a half an hour, well, the hour, the 3, the 4, the 4, the day chart don't really have a whole lot of bearing to what I'm doing, right? But if I'm holding my positions for a day or a couple days, then yeah, the hour, the 4 hour on the day chart have more bearing. And so you kind of want to make sure that you're looking at the data that's appropriate for your trading session. So going back to the 5-minute chart, I look at it to set my trends, okay? So and to know, kind of give me a directional bias of what's been happening on the day, understanding that if the market does come down into this area, it has a decision to make. Am I going to continue with the trend, or am I going to buck that trend and start a new trend? Okay. So understanding all the different decision points of where a market can make decisions is crucial, and probably the first key element that every trader should have in their arsenal. Understanding where the market has decisions. Okay. Trend is a very powerful trading. So if you trade with the trend, you need to know what direction that is. You counter trend trade, which Sean does a lot. You need to know where your decision points are and when you can counter trend trade and when it's not appropriate to. So the next thing that I look at, and we're going to talk a little bit about, is the basic stuff, right? So where is my support and resistance lines? And if you don't understand what support and resistance lines are, there's some great videos that we've done on YouTube that talk a lot about support and resistance. But basically, support and resistance are just, if you look at it in terms of floors and ceilings, well, where is price right now? Well, above price could be the ceiling, below price could be the floor. And is that floor made of wood? Is it made of concrete, or is it made of toothpicks? Meaning, how hard is it going to be for the market to break through that floor, or how hard is it going to be for the market to break through the ceiling? Okay, the more data or the more bars or candlesticks that we have supporting that floor, the stronger the floor, the stronger the ceiling is. If there is no data beyond to the left of that, so let's take a look here. Our major floors and our major ceilings on the 1 minute chart, let me go ahead and draw here, would be the very bottom, okay, of that right there of the trade, and then our major ceilings would be the very top of this, because we don't have a whole lot of data that supports if you go backwards, right? And particularly if I'm only trading for the next hour, that's what we would call our major support, our major resistance, okay? So floors support us, ceilings resist us. And so that's where you get the term support and resistance, okay? Now that is also dependent upon the direction that you're trading as well. If you're going to trade up or down, your floors and your ceilings depend on the direction that you're going. So the first thing I do, news events. Second thing you do, draw your trend lines. Third thing you do is we're going to draw our support and resistance lines. Where are all the points that the market could possibly make a decision during my trading session? Okay, and we've already identified our major floors and our major ceilings, or support and resistance. So the next thing we're going to do is we're going to identify some areas that could possibly be decision points in the market. Okay, and as you're seeing, what I'm doing is I'm just drawing these lines that represent where a possible decision point in the market could take place relative to where the candle direction is going. Now I'm going to just draw on here a little bit. Now, as you get going and as you see, as you get going and you get trading and you start learning the language, that you don't need to draw on these charts every single time, because you can start to see them. You start to know them. You start to recognize them. But I would highly, highly, highly recommend that you do this in your own trading as you're just getting started. Okay? Now, there's a couple key elements that I want to pull from this chart, this trade setup. Okay? So we've identified the trend. We have an uptrend that's happening right now on the 5 minute chart. We also have a slightly, consolidating on the 1 minute chart, but with a slight downtrend. Okay. So if we wanted to trade with the trend, I would say the trend is not really strong one way or the other than the fact that if you scroll out, we have that uptrend and then we have the stronger downtrend. Okay. So if you want to trade in the direction of the trend, I would probably say that I'd probably go with a downtrend. Would you guys agree or disagree that that's what we're currently seeing right this second? Good question. Delta asks, how do you open two charts on the same pair? Great question. Basically, is right here, new chart, open that up. Find the pair, Euro, USD is what we're trading right there. And then, okay, that right there, and change your time frame to 30 minute or whatever. That's it. New chart right there. So great question. Vin, good to see you. Hey, Jean-Francois, nice to see you. Just seeing if we have any questions out there. Okay. All right. Perfect. Hey, thanks, guys. All right. So, agree with the downtrend. Perfect. All right. So, as you're just starting out and you're just getting started in your trading, I would probably say the trend is your friend. Okay. Learning when to counter trend trade is kind of like going advanced on learning how to learn a language, right? Right now, we're just going to teach you how to say hi, goodbye, where's the bathroom, the important stuff. But as you start to be able to formulate whole sentences and paragraphs, then you'll start to understand, okay, what does this candlestick mean? What does it mean if I get an abnormal size candlestick? What do the wicks mean? What does it mean if it breaks through support? What does it mean if it breaks through resistance? What are all these things? And we're processing all this data really quick, and when you get to the Sean's level or my level or whatever, you're seeing things and you don't need to draw them out. But at the very, very beginning, let's draw them out, because it gives us confidence in knowing that, hey, we called it right and we do it multiple times, and we give you and you start to get into a system where it's just as simple as wash, rinse, repeat, wash, rinse, repeat, doing the same thing over and over and over. And if it doesn't work in your favor, what do you do to get out of your trades? Again, getting out of your trades is a systematic methodical approach to exiting trades. Where I see a lot of traders getting into mistakes or bad trades is when they don't have a systematic exit approach. You're not going to call the market 100% correct every single time you enter into a trade. You're not going to be right every time. You need to know that going in, that what do I do when 70% of the time I'm right, but then what happens on that 30%? Well, just like we're explaining how to set up a good trade execution, you also need a good exit execution, and be okay to say, well, this time it didn't work in my favor. And I'm going to show you that in just a second of what I do that helps me to have a systematic and methodical approach to taking losses. Okay, you're going to take losses, might as well control your losses. You're going to take wins, so control your wins, right? We always control our wins, but very few of us tend to control our losses. And so that's what we do. All right, so we know we have our support. You see right here, even on this price, it's coming down, it's testing that line. It just tested that support line and said, you know what? Nope, I'm going to bounce away from that. And I need more of my friends, or I need more strength in order to break that line. So I'm going to back up. I'm going to ask for reinforcements, and we're going to go at it again. We're going to test and test again. And obviously, the more times it tests, like a battering ram, the higher probability of it breaking, right? So if you look at it in terms of that way, now we have our price is right here, and we have our support and resistance. For the sake of this, of what we're talking about here, we're going to call these zones. And I drew over here, we're going to go to the whiteboard. So I got these zones, okay? These zones are also support and resistance line, okay? Let's go. So here is where price is at. So let's say that price is currently at, where's price at? 109.758, whatever. So price is currently at the 1.097. That's currently where price is at. So if price is here, this is zone 0. Guys, this is going to be really, really important to knowing how to get out of your trades in a methodical approach, okay? So if zone 0 is wherever price is at, then we have 3 zones away from price. So 3 zones or support and resistance. I just call them zones because it's easier for explanation purposes. If we're into a buy, so let's say we place a trade right here, and we place a buy, so we want the market to go up, and this is where our trade is. So if the market goes up, you can, a lot of times we're only going for a 2 pip gain. Okay, so let's say that this is equal to 2 pips. So our take profit would be at this line right here. It is always, always, always a good idea to have your take profit below the next zone. Okay, so if we're trading within this zone, we want our take profit to be below the next profit. It doesn't have to be all the time. It just depends on how strong this zone 2 resistance line is. It's better if you have your take profit below that zone because you have a higher probability of hitting it. And so if there's 2 pips, change this color. If there's 2 pips between here and here, this is my perfect trade setup right there. Between where price is at and between the next zone, if there is a 2 pip, I am loading up, or I am getting into, you know, a bunch of trades because it's a high confidence or high probability, particularly if trend is also supporting a buy decision. Okay, so let's say that trend is supporting a buy decision. So I get in, and I get in with 6 trades because I'm confident. I get in with 6 trades. Now I want to show this over here real fast. We'll come back to that. that you can get into one trade, and this is what Sean does all the time. You can get into one trade. Let's say that on a $10,000 account, and I'll show you guys, on a $10,000 practice account, you are able to trade with 2 full lot sizes. If you can see that right there, 2 full lot sizes. So let's take that out. So my max trading position is 2 lots. So knowing that is important. I can trade with two lots. Don't. Okay. Now I can get into one trade, but 2 lots. Now that's a newbie, right? And I'm gonna just go in and swing for the fences and hopefully I get a home run. Or I can break that 2 lots up into a lot of micro trades. And that's the way that Sean trades. That's the way I trade. And so when I say I put 6 trades on, I will never allow myself to trade more than 50% of what my maximum position size is. Okay? So I will never allow myself to trade more than 50% of what my maximum position size is. So I know that I'm only trading with 1 lot. Okay? It's very important that you know, or you have a comfort zone of how much that you want on, because if you hit this, if I'm into my trades at 1 lot, I start to feel like I'm in heavy. But I still have more room to trade to help me get out of those trades, if that makes sense. So I know that I'm not going to call the market 100% of the time, so I automatically set myself up for the times that I'm wrong, and how to mitigate those losses and how to methodically trade out of that. Okay, because I'm going to be wrong at some point in my trading journey. I'm going to be wrong, and I expect that, and so I have a plan for that. Okay, so 50%, never go more than 50% of your trade. 1 lot is what I know in my head that's the maximum amount that I'd like to be, or I'm comfortable at. So I'm going to break that 1 lot up into multiple trades. Now you could break that up into 10 trades of 0.10, right? Or, 100 trades of 0.10. Or you could break that up into a lot of trades at 0.02 is what I tend to do. For me, I tend to trade small because I don't like to hit that, and especially if I'm not really sure about the market or I just want to test it. Okay, if I see this trade right here where I have 2 pips, I might go in with a 0.05 and crank that up because I'm getting a little bit more aggressive because I have a higher probability trade. Okay, but as you go, as you grow, as you start out, you don't recognize those high probability trades. You don't know when to get aggressive until you do it over and over and over and you can see it. And so for the sake of starting out, draw on your charts, know your support, know your trend lines, and start with a small incremental size and break that up into multiple trades, because you're not going to hit it perfect every single time. So if we trade at a 0.02, that allows us to put 10 to 50 trades on at one time. Now, a lot of you guys are saying, what the heck, 50 trades, 10 trades? There's nothing wrong with that. What you're doing is you're maximizing your opportunity on each trade. So if the market goes down, so the market heads down, I'm still buying. But my take profit is up here. So on some, I'm getting 2 pips. Some I'm getting 2.5. Some I might even be getting 3 pips on. Okay? And you're maximizing your opportunity. In fact, I love it when I get in and the market goes against me, because it just means I get an opportunity to make more pips. Okay? So let's talk for a second. What do you do if the market does run against you to the point where I'm starting to feel like it's not a good trade anymore, and now I need to start to get out of to get out? I'm just going to clean this up just a little bit, because we talked about positive, right? It's easy to trade when you're winning. So it's really easy to trade, and where everybody struggles is, what do I do when I start losing on trades? Okay? So the same thing. Let's say that everything says I'm going to buy. So I get into a buy right here. My take profit is right here. But that was weird. Where's my eraser? That is a bup. I'm getting into a bup. Sorry for my handwriting. I'm trying to draw on a computer. It's kind of getting used to it, I guess. All right. So my take profit line is there. And now my trades, the candles start to go down. Okay. And they start going down and down and down. And I get into zone 2 here, which is against me. So zone 1, zone 2 against my trade. Because remember, my trade's right here. My trade is right here. And my take profit is here. So it's going against me 1 zone. It's going against me 2 zones. Okay, I'm still getting into more trades. Because remember, I like it when it goes against me. So I'm still buying right here. I'm buying here. And I am still buying on the 3rd zone away. Okay? However, once it starts to hit my 3rd zone, then I start triggering my exit strategies. When I start to want to feel like, okay, my zone 0 trades have now become, or the first trades that I've got into have now become a higher risk to me. Okay? Now I'm risking more than I feel comfortable with. And so if I'm in 3 trades here, now I'm starting to risk a little more than I'm comfortable with. Okay? So I'm going to take my take profit line here and I'm going to drag it down to zone 2. Okay? Remember, my trade is here, but now I'm zone 2 line, I put my take profit line. Okay? Between my trade and zone 2, that's going to be anywhere in between 1 to 5 pips, just depending on market conditions. Okay? Or how fast the market is moving, what you're looking at. But on a 1-minute chart, it's rarely greater than 5 pips between zones. Okay? So I'm moving my take profit. So this is my take profit, not my stop loss. But now my take profit is negative. So what does that do? Well, as the market kind of goes down and continues to go down, and then it comes back up, it takes me out of my zone 0 trades, but I'm still into buys here, and it gives me profit. Well, this is getting really messy. Gives me profit on these trades that are down here and a loss on that trade. So I'm negative. So if you guys can read that, congratulations. Because that is really messy. So I hope that kind of makes sense to everybody. Is basically I have 3 zones, 1, 2, 3, and then I have a zone 1, 2, 3, and a 0, and that is wherever price is at currently. So if I'm getting into trades and I break up my trades into 10 trades, I could have 5 trades here at 0.02, and if it goes against me, great, I just made money here. Or it goes in my favor, sorry, not against me. If it goes in, and I take profits here, great, I won, that's awesome. If it goes against me, I'm not managing that trade until it hits down here, and then I'm taking my take profit and I'm moving it down, okay? I want to make sure that that concept is understood, because that is really, really crucial piece, okay? I'm just gonna jump over here and see. Okay, great question. Timothy asked, Dave, are you able to make more on your winners than you are than your losers trading this way, or does it matter? Absolutely, absolutely. Because, right, like I said, we're not going to jump into a trade thinking we're going to lose, right? We're not going to jump into a trade thinking we're going to lose. And so if I have, so here's zone 0, and here's zone 1. I'm going to get into 5 wins here, or I shouldn't say wins. Let's not say wins. I'm going to get into 5 trades here. If it goes down a zone, I'm still getting into another 5. So I kind of break it up for me. And then if it goes down again, I'm going to get into another 5 trades. So I have a total of 15 trades on the books. Probably going too fast so you guys can't see. I'm not writing really good. But anyways, I got 15 trades on the books right here. If it crosses this line, that's when I'm taking these 5 out, but I'm winning on 10. Okay, now I don't anticipate it to do that, or I wouldn't have got into these trades. So 70% of the time, I'm winning on 15 wins, but I might have 5 losses. Okay, you do win a ton because, again, we're only going after 2 pips. Okay, now the thing that kind of may not be, the thing that might not be conducive to when you go through Beeline, and I see this a lot, is my average, right? My average win versus loss. That could be a little bit ugly because I'm only going for 2 pips on my wins, and sometimes I can take those 5 pip losses. But if I take a 5 pip loss, my average could be somewhere around 3 to 4, and my gains could be average on the positive side is 2 pips, or maybe 2.5 because I'm doing that. However, if you look at my win losses out of 100 trades, I'm generally in the area of about 80-20. That's probably a safe bet out of 100 trades. Sometimes I get all 100 right, okay? It just depends on how many trades you have on placed, how many trades you're working with. And if you have an exact amount, so in each zone, I know I'm only going to place a maximum of 5 trades. Okay, so if I know I'm only have 5 trades on, I know that I'm only 15 trades before I start feeling like I need to start looking at an exit. All right. Just jumping back to the questions right here. That example was with buy trades. It doesn't matter. Buy, sell, whatever. It's just like going back to the zones. You have zone 0. You're in a trade on a sell. Means you got zone 1, 2. Now remember, zones are support and resistance. Norma says for new folks, the 2 pips on the Euro USD, which is the lowest spread. Great point, Norma. I do tend to trade on the Euro USD because of spread, right? If you trade another pair, you can still use this strategy. You just need to widen your pip gain because you need to take into account for what the spreads are on that pair. But I love the spreads on the Euro USD, so I tend to trade the Euro USD and the USD JPY or the Euro JPY. Those are my main go-to pairs, and it doesn't really matter for me at this point. Again, what direction it does go, because if it's a downtrend or an uptrend, I just need volatility, right? This trade works in volatility. If it is going down or up and it never gives me that volatility, that's when you can get in trouble with this strategy. And also knowing that helps me to not trade in a certain conditions, right? You see a condition that's not conducive to your trading style, don't trade. Now, there's nothing that says I need to trade, right? If I look at the market, which it has been doing lately, is just a straight down in the Euro market or up, there's no volatility or no back and forth, I'm not trading. I don't have to trade if it's not conducive to that. But a large portion of the time, we are in up and down markets, right? I would say a large portion of the time we're in up and down. And so my trade strategy, my trade setups, the way I look at the market is conducive for a lot of the time, okay? But I understand when it's not a good time to trade. That's equally as important as understanding when to get into trades. Great comment, Norma. Appreciate it. I think that kind of, if I didn't answer that last question, does that work with all pairs or with some particular pairs? If I did not just answer that right there, explain your question in a little bit more detail, but I'll get into that. All right, so hopefully that makes sense. And I want to kind of look at, well, let me jump back to the chart. And as you can see, look, it tested this zone right here. I'm going to turn this on. It'll be a little easier to kind of show. I'm going to grab this. This allows me to draw on Alveo. Move this over here. Okay, so you can see that right here, it came down, tested that zone. Like I said, nope, I'm not ready to break it yet, so I'm going to go up and I'm going to get reinforcements. Here's my reinforcements, right? I'm going to gather up as much reinforcements as I can get, and then I'm going to go at it again. Oh, I went at it again. I tested that. Uh-oh. Nope, not ready yet. Need some more reinforcements. Oh, now we're breaking that. Okay, now we just broke that next zone. And that is typically what you see in a consolidating market, right? It'll come down, test, go back up, come back down, test. But I know that, so I place my trades accordingly. So if it comes down to here and I'm still into a sell, I am probably getting into more sells as it comes back up here. And then more, if it even goes up higher, I'm getting into sells here, right? If I'm trading on that trend, which we already established in the current market is a downtrend, right? And I anticipate that it's probably going to break this, but I love to have my take profits right here, which is before this zone break. And so I'm gobbling up all my profits. This is a little thick, sorry, right before it breaks, okay? Never, ever place your take profit line on the opposite side of a zone. Always to place it right before it breaks, because you want to get those tests. I would have made money here. I would have gotten out of trades here, gotten back into some more right here, got out of trades here, got into some more here, and got back out of trades here, if you guys can see that. And so there's a lot of opportunities that I would have made money. Now, let me just make sure that what I'm telling you is the truth on this, because in order to do that, you need to make sure that there is at least a 2 pip range. And look, there is. It's 4 pips. Like I said, between coming up, I would have gotten into some sells right here, and it would have triggered me out at that too. Then come down here, some more trades. And so you can see that trade setup does work on a lot of different market conditions, if you will. So now, briefly, let's go ahead and look. I'm going to jump over here to Trader on the Street, and I'm going to look at one of Sean's recent trading episodes. And we're going to look at this just for a quick second. Now, the advantages of watching Sean trade is that he talks through exactly what it is that he's doing, right? He lets you know, this is what I'm looking at. And so if we kind of look and see, you can see a little bit about what I just talked about. And we're not there, and it's okay. I don't want to have any audio here, so I'm going to mute that. But you can see, we'll go full screen here. You can see that Sean is trading on a sell right here. Sean's trading a sell, but he's not in heavy, right? It just triggered his take profit. Now he wants that take profit line to be, we're going to clean this up, get rid of all that. He wants that take profit line to be above that zone. And so he's going to get into a bunch of trades here because he knows that the market is coming down. If you look at the 5-minute chart, we're on a downtrend. We're up, and so he's in a sell right now. But he wants to get in on these sells where 2 pips. You can see he is trading for only a 2 pip gain right there. Okay, only a 2 pip gain. I'm going to make this a little thinner. And you can see that he has, right now he has 8 trades on. But when we first started this, he wasn't in a whole lot of trades. He was just waiting for that setup to see. And you see it starting to climb right here. But what is he doing? He's selling. He's selling the market. A lot of traders will be like, oh, it's going up. I need to chase the market. If there's one thing that you guys take away from this, from this YouTube live today, is never ever chase the market. Always try to predict the market. Try to figure out where the market is going, not where it has been. If you see a big candle that spikes in one direction, up or down, don't get into that same direction, right? Never ever chase the market. Try to predict the market the best you can. By trying to predict the market and it doesn't go in your favor, quickly try to study to why it didn't work, why your prediction was not correct. Okay. And as you do that, you'll start to realize, hey, I got this prediction right. I got this one right. I got this one right. And I'm getting them right more often than not. But always understand that 20, 30, 40% of the time, you're not going to get it right. So what do? I need to have a good, solid exit strategy to mitigate those losses. And we kind of talked a little bit about that. So as you can see on Sean's trading session here, he loaded up. He got into, I think, 8, 10 trades in that zone because he's like, yeah, it's going to come back and I'm going to have all my take profits above that line, and it's going to trigger into that, and it's going to take all those take profits. And there's one other thing that I want to show you. Let me erase this real fast. That if you fast forward this session just a little bit, if we fast forward this, get rid of this pen, dude. Oh, there you go. You can see that he's in sells right here, and he's coming down, and he's like, okay, you know what? It's going to take him out. It's going to take profit. It's going to take his profit out. But now, if we fast forward just a little bit, he's not into any trades. He's still not into any trades, and he's doing an analysis of what is the market likely to do. Again, we have a downtrend, right? On the 5-minute, it's still a strong downtrend, but Sean decides to get into some buys here and decides to do what is called a counter trend. Again, maybe you shouldn't counter trend trade unless you're ready, because trend trading is a little bit safer. However, you can maximize your potential if you can trade on the ups and the downswings, because that's what we get a lot. And so this is what Sean does, is he's counter trend trading, or he's into a buy, and he gets into a buy. But you can also see, as I fast forward here a little bit, what is this going to do? Okay, so we had a down leg right here. I got to do that. I got a down leg right here. We got a little bit of a down leg right here. So what is the next thing going to do? Okay, we also have it up against a support and resistance zone right here. That's a crooked line. But we have it up against a zone right here. Is it going to break through that zone? Well, guess what? It just did. It just broke through that zone. Okay, so what do? If I'm Sean, I'm still confident that I'm going to buy. In fact, he has these white lines on, kind of where we talked about. This is the zone, and this is his bottom zone right here. You see that little white line basically for Sean that says, if it crosses this line, I am no longer in favor of buys. Okay, if it crosses this line, this is where I'm going to start deploying some exit strategies. This is my line in the sand that if it crosses, I will reverse my decision on my buys and go back to my sells. Okay, so let's fast forward just a little bit and see exactly what happens. Fast forward just a little bit. So he's into that. He's into that, and he draws. Let's see. Let's go a little bit more forward. Hard because I can't just fast forward like 10 seconds. You see that across this level, he's into more buys. He's still buying. Okay, a lot of us out there will be like, oh, it's going down. Let's get it into sells. But Sean's buying, and he's like, okay, is it going to cross this level? Is it going to cross this level? It's coming down, it's testing, and it's retreating. Remember, I need to go get some more friends to see if we can break through this together. I can't do it by myself, so I need to gather up momentum and come in and do a running charge at it. But he's still now he's kind of like, okay, it's like against that line in the sand that I drew. Is it going to cross that line? So let's go a little bit more. You see how close it is to that line? It really is lines, right, guys? I mean, if you start to look at it, you can start to see and recognize where the lines are or where the decision points are in the market, okay? And you can see that it came all the way down to his line, and now it's starting to go back up, but he still bought all the way down. And he put his take profits underneath he put his take profits underneath this zone right here because it's more likely that he's going to win on that trade, on those trades, than if we were to put his take profits. Then if I keep hitting that, it's the wrong button. Sorry, guys. And if you were to put his take profits above this line, right? Because he's more likely to gobble up those profits, right? Now you can often see that Sean has this many pips on. Sean has 1,600 pips on the day, but he only has a 1% return or a 202% return, which is awesome, and that's great. That's really good, but he has a lot of pips because he places a lot of trades. He doesn't get into a full lot, half a lot. He has a $50,000 account, but as you can see, he's only trading with a 0.10. And as the market as the market reverses, he's waiting for it to reverse and go up and to take his take profits out. You know, you will see him a lot of the times adjust these take profits, as he will. I think he'll grab this. If I've seen Sean trade a lot, he might grab that top take profit line and he might pull it down, or he might just close out of it manually. Let's see here what exactly he does. But he's saying, oh, look, there's a decision point. It just made another support or resistance. And that's what the market constantly does. Makes more points or lines in the sand or zones. And so you need to be cognizant of that and drawing your zones as you go, because the market will create new ones as you go forward. And so the new data is more important than the old data when you're talking about zones, right? So a 5-minute old zone is more important than a 2-hour old zone. The market's going to tend to add more weight onto that zone than a 2-hour old zone. Hopefully that makes sense. Okay, so we look forward. We're going to fast forward just a little bit more here. We're going to see exactly what this trade does. And as you can see, it's starting to climb. So Sean has his take profits right below this zone right here, right below it, okay? Because if it was on the other side, the market would struggle to hit it, or it would be harder to hit those take profits if his take profits were right there, right? So he puts his take profits strategically placed in an area that's most likely going to get his profits. Okay, and then we just saw him do some sells over here, reverse, and do some buys over here. And that is honestly how you trade. But as we're starting out, don't get into things that you're not ready for. There are so many things that you can learn, so many things that you can bring into your trading knowledge. Let's focus on the basics. Let's focus on how do we say hello, hi, and where's the bathroom. Then we can add in sentences, paragraphs, and start to read the markets. Everything here is dictated upon price. What is price doing? What is the action of price? We don't need an indicator that says that cross this line or that line, or the horoscope today of the day says that it's a good day to buy, right? Knowing when and where the zones are, how to have a solid exit strategy is going to do you so much better than waiting for a line to cross. Again, if you're trading the 1 and 5 minute chart. So let's just fast forward a little bit and let's see how these trades actually did. So look, they're coming back down and starting to return on him. Oh, and then I fast forwarded a little bit too much, but it looks like it hit all of those trades and it bounced back up and got him out of those trades. Okay. And right there got him out, and then he has one last, well, that's his price. So we got him out of all of his trades. And so you can see he traded, he was in a sell here, and he started to buy here. But guess what? He was in a sell as the market was going up, and he was in a buy as the market was going down. Who does that, right? Well, you can. You can make money when it goes up and make money when it goes down. It doesn't matter. You need to predict the market, know where your entries are, know where your exits are, know where your zones are, and get your take profits in a position that is more likely to hit than a harder position on your take profits. You do that, wash, rinse, repeat. wash, rinse, repeat, trading now becomes easier. I'm not going to say trading's easy because it's not, but it becomes easier. You have more wins than losses, and you start making consistent profits every single day. Guys, Sean trades Trader on the Street every single week. He finds somebody, he gets somebody like John up here. In fact, John, you are here on here, right? So he gets somebody on there. He trades every single week. And to date, he's had some really, really rough sessions. But for the most part, every session has been profitable. Some have taken him longer to get profit than others because even he's not right every single time. But for the most part, he spends about an hour to 2 hours with the trader, and he pulls out a nice little 1 to 2% return consistently. Guys, we don't need to be traders like Sean. We need to be traders like Dave. We need to be traders like you, like Norma. We need to be traders like who you are as a trader. That's who you need to be. But you need to be consistently good at trading in order to start making a profit out of the markets. And with a system that you do with a good start, a good setup, a good exit strategy, and a good knowledge of what price does, that's going to be the fundamental to any strong trading strategy that's out there. Guys, I hope that you've learned something here on today's episode of YouTube Live. I hope maybe there's some golden nuggets that you can take away and put into your own trading session. But if there's only a couple things that I would say, when you're just starting out or you're trying a new strategy, draw on your charts. Identify areas where the market can make decisions on any time frame. Know when you're going to get out, or know when you're going to get in, and have a clear and defined exit strategy to when you're going to get out and when that getting out is going to take place. And don't worry about being wrong. Like, don't have an emotional connection. It's like, dang, I was wrong. No, oh, well, I was wrong, so I need to put my exit strategy in place. I've talked to so many traders that their losses are greater than their wins because they let their losses run. Don't let your losses run. It's easy as that. Have a clear and defined exit strategy that you're taking losses on 10, 20, 30, even 40% of the time, you're taking those losses. But you're hitting your wins on 60, 70, 80%. And as you get better and better, like Sean, you're winning a lot of your trades that you're on because you're knowing when to get into the right trades. I'm going to look at the questions real fast, but as far as that goes, as far as my presentation or what we wanted to talk about today, I will answer some questions and then we'll call it from there because we've been a little bit longer than I'd like to be keeping you guys here. So let's go ahead and ask some questions. Any questions out there? So Hawaiian Flamingo says, if you use fewer positions and make everyone a different lot size, first in, first out, what apply? That is a great, it's not a question, it's probably an answer to somebody else's question. That's a great point. First in, first out, right? It's really hard to do that, but if you do exactly that, then first in, first out doesn't apply. If you're not trading on the Apiary platform, you have first in, first out rules. We don't here at the Apiary Fund, which is nice, and it makes it really easy, or a lot easier without having to have the FIFO rules. Okay, love the thanks, Tom. Appreciate your comment. Any other questions, guys? If we don't have any questions, that's great. It either means that you're sleeping on me or I did a really good job. I hope it's the latter. Norma says she still has a hard time knowing what is a counter trend and what is what is the trend. A counter trend would be anything on the 5-minute chart. If we're in a downtrend, if you're buying, you're in a counter trend. Okay, that's basically it on a counter trend. And so I would say the larger time frame is going to give you your trend, and if you're trading against that, that's when you're counter trend trading. Gary says, how would I find the recording? That's on traderonthestreet.com. All of his trading is on traderonthestreet.com. And so you can watch that. He'll talk about it. He talks through it. All right, I'm just kind of scrolling through a question. Derek says, you had said where. Derek says, you said that we're in 15 pips by the third line and lost 5. I'm a little confused on how you won 15 and lost 5 trades. That's a total of 20 trades. Where did the other 5 come in? Okay. So, basically, I think it was back to here. It's because how many zones that you're trading on. So you can get into 15 trades, you lose the 5 or win the 10, so that's 15 trades. Or as market, where's my pen? As market never goes, and I'm not going to sit here and draw candlesticks, but market never goes like this, and it never goes like that, right? The market will always go like this, and so I'll get into some more trades here. I'm not just sitting on those trades, and then the market will go down to here. So I remember my rules are I will never get into greater than 50%, but I'll continue to stack trades. So maybe I'm in 5 trades. I'll go up to 10 trades here. I'll go up to 20 trades here, as long as I'm not in greater than 50% of my maximum amount that I can trade with. Okay, because 50%, 30 to 50% for me says I'm getting in a little bit too heavy. Okay, so for me, those are my rules. I never want to get into heavier than that. So whether it's 15 wins, 5 losses, or whatever the case that is, I will often look for opportunities to stack more trades on, because that just maximizes my profit, because I'm pretty confident where the exit strategy is going to be. So great question. I'm just going to go answer one more question if we have it. Norman says that, let me put it this way. I see a trend change before Sean calls an outside range. All right, so we didn't really talk about outside ranges a lot, Norma, and I don't have time to get into what's an outside range versus a trend trade, but maybe we should do that, because an outside range definitely is kind of the nemesis to this trading style. And so maybe next week we'll talk a lot about outside ranges, and that might help you a little bit, but I don't want to get into outside ranges today because we're up against the clock. So, but I will, let's do that. Let's put together an outside range, or do's and don'ts of when trading, or when I like to trade, when I don't like to trade, kind of the do's and don't rules. So hopefully we'll do that maybe next week, is what is an outside range, why should you trade it, and why you shouldn't trade it. And hopefully that'll help you, Norman, because I know a lot of people have that question of what is an outside range, how to identify it, and should I trade it. So let's leave it at that. Sorry guys, I went way too long. I just get excited about this. Like I said, we kind of pulled back the veil, showed you guys a little bit about what it is that we trade. So for those of you guys that are with us, great, I appreciate it. Give a thumbs up if you like it. Add some comments if you have any questions, and I'll get to those. Or if you'd like to see different content, whatever the case is, let me know, because I'm here for you guys. And so particularly, like I said, thumbs up, comment, subscribe, all that fun YouTube stuff, so that you guys are notified when we go on and have the next one. All right. That being said, guys, good conversation, good questions. Love it. Hopefully you guys will be able to use this in your own trading. And with that, hopefully you guys have a happy trading journey, and we'll go ahead and end the live here. Thank you, and we'll see you next week.